7.3, which is going to be a report on hazardous materials and designated substances. I'll explain it more when we get there. So on the motion to approve the amended agenda. Bo, Colin, all in favor, thank you. Approval of the minutes. Bo, Colin, all in favor, good. So now we have Ashley with MMP. Do you want Ashley to start, Lindsay, or do you want to start? No, up with Ashley, great.
Okay, perfect.
Yeah.
I have shared my screen as well, but if you have it in your own package, Lindsay did include the package as well. So as mentioned, my name is Ashley Didoni, the engagement partner on the file. Just a thank you to Lindsay and team for all the support that they give in providing us the information to complete our audit. In terms of status, we have substantially completed our audit engagement. So pending approval discussion here today, and then some finishing items. We have a representation letter that gets signed in subsequent events. We would be able to issue our report. So that's where kind of the status is on the file. There's no significant limitations placed.
Just starting, Steve, so you're not missing anything right now. Just Anthony from FPP is just starting into her audit report.
So just saying we're substantially complete our audit. No significant limitations placed on the scope or timing of the audit. And we do have a clean opinion included, an unmodified opinion that the statements are fairly presented in accordance with the accounting standards. We did have an emphasis on matter that I'll highlight when we get to the statements themselves, but I'll start kind of just finishing the audit findings here. Audit reporting matters. So this circles back to the audit service plan that we had provided originally or circulated within your materials at the onset of the engagement. And these are required communications with those charged with governance as per the accounting standards. So just confirming from an audit service plan perspective, there was no deviations from the plan that we had originally set out and communicated. Final materiality was $42,000 for the year, slightly up from the previous year there, and that's really a function of the revenues increasing in the year. In terms of any identified or suspected fraud or non-compliance, well, we didn't do any type of forensic audit. Nothing came to our attention throughout the engagement in either of those areas, but I'll just pause to make sure nothing on your end in terms of fraud or non-compliance that you're aware of. Okay, perfect. No significant matters arose in the course of the engagement with respect to any related parties or going concern of the organization. The accounting policies and estimates and disclosures remain consistent with the previous year. There hasn't been any real significant changes with respect to the public accounting standards in this year to note. And I'll highlight that too when we go through the statement. In terms of deficiencies in internal controls or best practice recommendations, as we like to call it as well, we do have an appendix that will go through there to just walk through some recommendations that we have. No significant matters from discussions with management to bring to your attention. One other item, and again, this is consistent with the previous year, and I will correct that typo there before we issue, but we did note that the designation as the municipality for the HST rebate, so that's still outstanding with respect to that status on compliance. So still waiting to hear back on that receivable, which I'll highlight in the statements themselves. So similar to the previous year where there was that rebate that was put forth, it was just over 2.4 million that's still yet to be received.
Oh, 2.4 million.
Sorry, 1.2 million.
Okay.
Yes, yeah.
Say,
I doubled that.
that went okay for us.
Perfect. The significant risk areas and responses. So these were the significant risk areas we identified. Management override is a presumed risk in any file because management does have that unique ability to get into the systems and make changes. So we do some targeted testing over journal entries, estimates, different procedures with respect to that. Nothing has come to our attention with respect to those procedures or no issues noted. The other one is around revenue recognition. So just making sure that those revenues are recognized and recorded with the accounting policies, and there's no kind of issues with respect to when the revenues are being booked in the system. Again, we performed specific targeted procedures there, and no issues were noted through those procedures. Some other areas to confirm. So our independence, I can confirm we remained independent throughout the engagement. We'll issue a formal letter as well with the final package, just confirming that for your records. Management representation, so this is where we'll have Lindsay and Bill sign off that they've provided us all the information required to complete the engagement. And then any significant differences or unadjusted items, we have an appendix as well, which I'll walk through. Appendix A, I won't go through in details. It just goes further into the required communications with those charged with governance. So a good reference point for you. Our audit service plan and audit findings will have all these embedded within them. But just if you ever did want to refer back to the specific guidance on the accounting standards. So for Appendix B, so these are our best practice recommendations. The first one there just related to the budget itself. So we did note that there was no budget prepared for the 2025 fiscal year. I understand there has been a budget for 2026, so that process has been completed. But the public sector standards actually require the budget to be completed and disclosed within the statements themselves. So it was one item that we did have to emphasize in our report that was offside the requirements of the standards, but it didn't impact our opinion. So we did note during the audit that the insurance premiums were fully expensed in the year rather than allocated between the prepaid portion and expense. So just working with Lindsay on that. So the comparatives this year look a little bit different, but going forward, it will be very consistent with that. And we have kind of our unadjusted difference to reflect that change in recording as well. Excess cash. So again, just noticing a large cash balance there, just recommendations over treasury management. If there's any kind of investment policy that you wanted to create for the housing corporation to have a plan around that. I mean, that you do have the debt piece of it as well. So kind of weighing back the repayments there and the priorities. But just if you were able to gain any kind of interest to utilize on that account or just have that into consideration as well. So nothing significant there, just more of a best practice consideration around having an investment policy for the organization. Replacement reserve. So we did note in our review of the discussions held that there is that replacement reserve with a balance of 280,000. It's just over that at the end of the year. And recommending that gets tied back to kind of a study around what replacements might be upcoming. So looking kind of down the future into what major repairs and replacements would be required for the properties, just to gain an idea of the sufficiency of that reserve to cover kind of future capital projects on the units themselves.
Just got a quick question for Lindsay.
Yes.
This doesn't show up on the asset management plan, does it?
No.
Okay,
Not for the municipality.
not for municipality, okay.
So that 280 is in a reserve fund now?
Yeah, it's within the surplus. We have a note just showing that you guys have made note to put that kind of aside.
So it's in the surplus of 600 or it's over and above
I
600?
think it's over and above. I think.
600 is cash.
600
yeah.
cash. So then there's 600, then there's 280 above that. So we actually have 880.
I'll show you too, because it's a little bit,
Because this thing had no money before.
Yeah, so
and I wouldn't, yeah, go ahead.
let's kind of actually run through it and then, because I'm going to recommend that we take all of this to July and start getting everything answered and figure out how we want to deal with this.
Yeah.
There is still a deficit, so I don't want to confuse the fact that there is cash, but then operation. Yeah.
Yeah, no, I was just trying to figure out where that went all the way to the end.
Yeah.
That sounds good.
I'll definitely highlight that because we have a full chart that I think will be helpful in showing kind of where that surplus is actually landing.
Okay.
I could just, cause I'd be like, well, cause I see 900 there, right? So that's. What,
Yeah.
That's what I mean.
Yeah.
Where is it like?
Yeah. And then due to the municipality, so I believe you guys have been working on a formal agreement, putting that in place.
Yes.
Yeah. So just at the time of our audit too, knowing that's like worked on, but continuing to recommend that gets formalized. The rental properties, so we did notice some vacancies throughout the year. So obviously that impacts the total revenue that's available. And when you're budgeting too, just looking at kind of having a balanced budget to offset the costs that are there to help. And we mentioned kind of that operational deficit that I'll highlight more. But just to chip away at that piece of it over time too, to ensure that we're covering the costs there. And then, as I mentioned, there is kind of an embedded deficit within the general operations that I do want to highlight to you guys, especially if you do need to kind of speak on the topic. As you mentioned, with the cash sitting there, it is a little bit misleading that there are these funds, but there is kind of, I want to kind of work through what the pieces of the surplus are, in fact. So these were the unadjusted entries that we had that require kind of sign off in conjunction with approval of the statements. The one was just in relation to amortization that was taken in previous year, a little bit too much amortization. So we just make note of that piece of it there as an adjustment. The second one there is to record the water sewer charges expensed in the year. So there was a bit of a difference in the billings that got caught up and noticed in the year that was corrected. So just recognize some of those charges were related to the prior period. And then recording the impact of that insurance that I talked about being expensed in the previous year and that prepaid portion. And lastly, we did just a sensitivity analysis over the asbestos that had been remediated in the year and layering that back to kind of the rates that were used in your original calculation of that asset retirement obligation. And so I wouldn't say this is kind of a known error, it's just more of a sensitivity in the different rates that we're seeing with the asbestos.
Yeah, so what we had originally, T. Harris gave us the estimate of this when we had to set up this asset retirement liability. So we had a set number there, and then the work that was actually done in 2025 was less than the original estimate, but we were hesitant to reduce the estimate because it was like worst case scenario if you go in and have to do all kinds of things. So we didn't really have to do that on those 2 units. That's why it was a little bit less, but just in the off chance that the remaining areas of asbestos do require more work, that's why we chose just to leave the estimate a little bit higher.
Those are the 2 reports that I've added to the agenda.
Sure. Yeah, no, that's perfect. Any questions on the findings at all, or anything else you wanted to go into further?
I don't have to wait until
I got
get my head around the whole thing.
general
Yeah.
comment.
Yeah,
But I think Lindsay might be able to
Yeah.
walk a lot of us through that when we
Yeah.
prepare for that.
My general comment is that it's great that you highlighted areas that need to improve on, like to make sure we're doing our job properly. So a policy for cash, I think that's great stuff to have. That gives us something to work for. Yeah, I think that's really good that you did that.
perfect.
That's it. Yeah, I mean, I think the audit, the numbers, I'll have to pull apart, but I think Lindsay will be able to lead us through most of it, but yeah.
Yeah.
Because the motion that I would be seeking, but it can be amended, would be that we receive the report and furthermore refer Appendix B, which are all of the highlighted stuff we need to deal with, to the July meeting to establish a timetable to address each. So not necessarily do the work right then and there, but let's figure out priorities. And then that tells Lindsay what, because I think a lot of that's going to come back to Lindsay to start working through with us. And we'll set that up in a timetable and pick away at that and
That's the deficiency in internal controls.
Yeah,
right?
yeah.
Yeah, I agree.
so that's the way, instead of just jumping in to a big pile real quick. Well, that's going to be the motion that I see, but I'm open to amending that in any manner that the board. So.
Just a quick question. Though.
Yep.
I thought it when I was reading at the top view thing, when you've been talking about the deficiencies that you found major. What was the major one?
Oh, it's because it said significant.
Yeah.
Yeah. So our template is set up in a way that might be a little bit more aggressive than it needs to be with the significant. I like to kind of soften it with best practice consideration.
You don't have to soften it with us.
Okay.
Well, more of a summary though. And
Yeah, I did say that, and I can tailor it there, try to tailor it there a bit. It kind of, the appendix piece of it is a bit embedded, but from my perspective, probably the most significant one was the budget, because that's the one we have to call out in your statements. The rest of it, I would just say, are kind of good best practice pieces to work through for sure, kind of put those in place, but looking at it from kind of the business lens too of, your priorities, but for sure the budget piece of it would be something that we're flagging in the audit itself. Yeah. But I can, in that,
We can't change.
exactly, yeah. I can kind of finesse the wording that's dropping down to it too, so it's a little less alarming, but from my perspective, probably the budget one would be.
So Lindsay, as we work through this internally here, is this something you connect back to Ashley and MMP with? Seeking out best practices, or I know you have all the qualifications, so do we
Yeah,
work back to just to resolve? all of this?
Just here, if we have any questions,
Yeah.
I know with our municipalities audit, we've kind of been back and forth on some of the items that were
Yeah,
identified last year and how we were gonna fix them this year. So yeah, we definitely have
I think some of that can take the burden off of your shoulders specifically, and, okay, that's great.
And we always would check with Lindsay
Yeah,
too
that's good.
on the items that we flagged last year, kind of what's status. So if you guys are kind of putting the plan together in place and can show, this is where
Yeah,
we.
there's no surprise, for me, there's no surprise in Appendix B at all. Because we've been talking about this for at least the last year. So we've restructured the entire organization, right? Which is why we now have this board.
Yeah.
And all of council sit as corporate membership. So, and we sit as a local board to the municipality.
Yeah.
So we now know who we are and what we're doing. Yeah, there's no surprise. We've talked about the repayment plan. We've got some stuff in place. Reality is we're sitting on a lot of money because we know we're still waiting for final answers from
Yeah.
some questions from lawyers and HST, I believe it is. But at the end of the day, our decision will have to come down to what are we going to give back to our lender, the municipality?
Yeah.
And what do we need to hold in a replacement cost reserve to operate this place? And then do the budget and find out how much is this costing us over and above what our rent pays for.
Yeah.
Because we gotta go back to corporate saying, you've got a funding shortfall that you're gonna have to make up. Right, so we wanna get those steps done.
Yeah, no, that sounds good.
Yeah, so nothing new, but not surprising that you would catch all of those things. It's nice to have them on paper.
And one last comment, Chair.
Yeah.
What's good about this, I don't think
We did an audit last year. No, we did one the year before, so an audit hadn't been done on the board for a number of years. So even the worst language is better than we had first good years.
Perfect. So I'll just highlight the statements too. Did you want to? Or?
No,
Okay, good.
good, yeah.
So as I mentioned, our independent auditors report here, we have given a clean opinion that the statements are fairly presented in accordance with the accounting standards in terms of the accounting policies, practices, and numbers, but we did need to highlight that emphasis a matter on the budget as that is the required disclosure in the statement. So that would come off next year because you do have your budget in place. We can include the column. Otherwise, it goes through the responsibilities of management, our responsibilities, but the form is consistent with the prior years. And those are the kind of key things I would highlight there. In terms of the statement of financial position, so this is the position on December 31st, 2025. So we mentioned there that the cash balance, that's going to be different today. We're almost 6 months kind of past that date. But to your point, kind of working on that cash policy is great, especially when you do hopefully receive that 1.2 million from the HST piece of it, and that balance is growing as well. So that is the majority of what's in accounts receivable is that HST funds that you're still waiting on for the rebate. The holdback receivable was actually received in February. So that has been cleared off in this first part of 2026. In terms of the liability side, the increase there largely due to timing. I think there was 3 months worth of tempo invoices accrued at the end of the year this year versus 1 month in the prior year, just to kind of get caught up on those invoices. So that's kind of the increase there. No changes in the amount due to the municipality. And then your long-term debt has just gone down in conjunction with the payments that were made in there as well. The asset retirement obligations is coming down as well with respect to those 2 abatements that were completed in the year, as Lindsay mentioned as well. So if you look at your total,
Sorry, just on that, on our assets and liabilities.
Yeah.
Like the cash up top. From 24 to 20, we have more cash.
Mhm.
Is that the only difference in our thing?
Definitely the cash went up, the receivables went down slightly there. Holdback really stayed the same. The payables were up over the previous year. So all those little ins and outs, it did remain fairly consistent in terms of your asset and liabilities. So your net debt position is relatively consistent with the previous year.
So our cash that went up, is that actually profit from last year? That put us up, or
So I can show you two on the cash flow statement. That might be good to look at. So there was actually a deficit in the year. But when we add back the amortization piece of it, because that's a non-cash item, and the asset retirement, there was kind of that 60,000 that would have factored into the increase of cash. So you will see a deficit for the year when we look at the next statement, but adding back that non-cash item for the amortization does put you into the profit. So that's what you're kind of seeing in the increase in cash, as well as there's some changes in the working capital. So with the accounts receivable going down, you did have an increase in collections of the 35,000. Prepaid changes there to reduce the cash, and then accounts payable went down as well. So then you have that pickup on the 34. So the movements there kind of ins and outs, and then also the debt repayment. So there was kind of a small annual surplus when you don't factor in the depreciation, some changes in your working capital figures, and then about 50,000 of principal repayments on that debt.
so if we don't take in the fake money,
Yeah,
like, then we're making,
your increase in cash was just under 50,000. If you're looking at it from the cash basis, yep.
yeah, like all I'm really trying to do is I don't care about depreciation and amortization. Like, I just want to know where it sits from does it cash flow standpoint.
Yeah, there was positive cash flow in the year of about 50.
Because that's really the long and the short of what it needs to do. At the end of it, yes, we do need to replace something, but right now it just needs to cash flow.
Yep.
So that we can say it's not costing us a fortune.
So the net debt there, again, slightly down over the previous year, 8.8 million. And then you have your tangible capital assets of 11 million factoring in. And remember, that's just the cost, not necessarily the fair value. So that's likely higher. Prepaid expenses of 78,000 for the year. And then your annual surplus is coming out of the 2.3 million, which I'm going to show you the breakdown of that in note 9. Not sure.
They changed,
A group is, but
yeah.
Quick question, Lindsay.
yes.
Just matter, the 600,000, they're just in a savings account. It's not an investment account.
With Bank of Montreal, just to be.
You won't get like 1.5% or something.
I don't know off the top of my.
I just curious, they just mentioned the mic, you may want to lock it up, so Doc said some of this stuff.
We should probably have a cash policy.
Yeah.
Says we should always maintain a balance of as much as free available cash and some percent now.
We always hope we get that GST money back or HST money back and then give it back to municipality, which would alleviate a lot of those things off the list, right? But here we still wait for the government to give us a final decision what amount of money we're getting back.
I apologize. I gotta go to OLI and congratulate the grads.
They had full occupancy with eventually with increased rates. Certainly.
It would have sought to.
Yeah. It could potentially.
You hope
so.
Potentially, yeah. It's a good policy, but I think that's a big conversation and that's why sorry, you still got more to go, but that's the motion. That's why I bring the motion. I'm looking for somebody to bring the motion. Yeah, continue on, please.
Perfect.
See us through.
So then the statement of operations, so you'll see here the budget column that's required. So we just have that as blank for the year. Total revenues for the year, 757,000, up from 483 as you're filling the units, but still not at capacity. So definitely some opportunities there for additional revenues. with that. So we did see quite a bit of vacancy in different units throughout the year. And then expenses for the year there, just over $1 million, which was up from $850 in the previous year. And the annual deficit there showing at $285,000. As we do talk about kind of the non-cash items, the amortization is pushing that down. That's a non-cash item. So when you're budgeting too, and maybe this is how it factors in, you could have kind of your without amortization and then have that kind of below the line as well, just to show kind of what the cash flow is without that piece of it. Annual surplus at the beginning of the year, $2,571,000. So taking into account the drawdown of that deficit, it was $2,286,000. And the depreciation is a required part of the accounting standards to have that recognized. A lot of municipalities too find it harder to budget with that when the new PSAP rules came in. So it really is something to kind of consider there with and without.
So if I'm reading that correctly, with the amortizations, it says you should have lost $205,000.
Yeah.
If you take amortization of year, 35,000. So,
Yep.
good.
This is just a further breakdown of your net debt from the year. So that's the assets minus liabilities that we looked at on the first page there and kind of the inner workings of that one. So we did go through the cash flow as well. Any other questions on the statements themselves before I get into the notes?
Just on the mortgage, the three, whatever the mortgage is.
Yeah.
Is that's interest and principal?
On the cash flow statement,
Yeah,
that would just be principal.
Or where-
payments.
wherever we see that. You know, where it showed the amortization, yeah.
This one?
Where does it show the debt, like the,
The total that's there?
I think the 300,000 is the amortization of the building.
Mm-hmm.
yeah, but the amortization is just
An accounting
Good.
policy, yeah.
like it's the period of time you put over, but the payment, we're making so much in interest and then so much in principal, right?
Yeah.
Is that all included in there, or is the principal, or is that just interest?
Yeah, it'd be the cash payments that you paid out, so both of the for the repayments. And then we do have a schedule in here too of the future payments coming up that includes principal, interest, and total for
Yeah, so the total is, we include the total
yeah.
in the statements.
It's the principal that's showing on the cash flow, because that's what's changing on the statement of financial position, because the interest goes quite a bit more there.
The interest is on the profit and loss statement, so we paid
Yeah,
like 331,000 in interest and then about 48,000 in principal.
in principle. So when you put that together, if that were on the, like when we think we just made $34,000, right? Did we actually make 34,000 or did that, because we have to pay the principal, it's not included in that, did we kind of just break even?
Right, from a cash perspective.
Well, I mean, it's, yeah, I guess this is where I lose. I understand we budget and we do this. From a, does this thing make money standpoint?
Mhm.
That's where I'm looking at it. What does it actually make? And it probably just breaks even
Well, I think
at best.
the interest is gonna be already captured in your deficit number.
Yes,
Yeah. So I don't think we have to add it on to this. You did make the 50,000 of cash, because the interest and principal effectively are both included in this.
you didn't make it in cash. Or you
You did,
paid,
yeah.
you paid it in cash.
You lost money. You lost money, but when you add back your amortization, you had a cash increase of $50,000 for $49,062. But on paper, you lost money because you had to use your amortization, which is an expense. So you lost 285,000, but really you made 50,000 positive cash flow.
So we're up 50 grand.
up 50.
That's all I need. Like,
Yeah.
to me, just break it down to what are we, like,
But that's not part of the audit. That we can be prepared.
yeah, but we keep going through this thing like it's the Bible. And really, it's,
But this has to be done to accounting standards. So
I understand it has to be done to accounting standards. From a, we're running the place standard. These are almost, I don't want to say fictional, fabricated numbers. They don't actually help us run it.
Agreed, but it's not this conversation. We can have that.
Yeah, I agree with you.
No, I'm just asking because it's in here, so.
One of the numbers, I mean, the big number that we want to go back to corporate membership with is it ran at a deficit and you have to fund. If we need to start asking the municipality for funding to keep paying the bills, we're gonna have to, or we're not gonna be able to take the 600,000 and the 1.2 million back from
But if-
HST and pay them back, right?
But if we go with these numbers and it shows that you lost 50 grand and you didn't actually lose 50,000 because you're just taking, like, that's more what I'm saying.
I don't know if I can really speak here, but the one thing I'd be concerned in showing a loss is that when you have to do reporting to CMHC, they're gonna freak that you're showing the loss on your reporting.
I
Right?
think they're used to audited statements, so I think we've had
Yeah,
experience.
they'll lose.
Yeah.
Yeah, but I'm just saying, they may not like the fact that your debt covenants isn't showing up very well, right, when you're showing. Like, I know in my statements, they want me to have a $1 positive. Like, I need to be in the positive. I can't be showing loss, even with amortization. So that could be something to be aware of. They may.
And I think when you're budgeting to like working towards getting to a balanced budget, it would be something good to think about as well. Just so that you're not kind of accumulating those operating deficits too.
Yes, exactly.
Is in the, again, it's not my place, but in that interest line, is there interest back on the money you borrow from the municipality? No. So if you guys start charging yourself interest back to the municipality, that's gonna increase your expenses, which is gonna put you farther in the red.
Well, the one was kind of a grant over to us and the other one was a loan over to us. So that's,
Yeah, not my.
but yeah, we gotta,
None of that impacts the audit. So
no, it doesn't impact the audit, no.
let's
All
stick
in
to the.
discussion. So I won't go through in detail. The significant accounting policies are similar to the prior, no changes in the standards there. But a couple of notes I did want to highlight. So just on the accounts receivable component, we do have disclosure of that 1.2 million related to the sales tax rebate that you're expecting to receive back. Just on that piece of it. Tangible capital assets, so that's updated for the current year with any additions and disposals, just to highlight the changes there. Note number 6 is the long-term debt you have with First National. So that's the external debt that's being paid down as well. And then we have the repayment schedule for future years. There was quite a number of related party transactions, just given the nature of operations working with the municipality. So including those for disclosure as well, that is a requirement of the standards. And then the asset retirement obligation. So there was those changes in the year just with the liabilities that were settled. And we do have an annual accretion expense, which is basically amortizing that into your statement of operations, recognizing that liability over time. So the surplus is the one I wanted to highlight there. So based on what we see on the statements, what you're seeing there is that bottom numbers, that 2.2 million, 2.5 in the previous year. But when we really look at that, of that you have invested in intangible capital assets. So that's the tangible capital assets that are on the books, less any debt used to finance them. So that's 3.3 million of that surplus. We have an unfunded asset retirement obligation at 57,000. Breaking out your replacement reserve, which you've kind of earmarked for the future there. And then we're left with the operating deficit, which is the accumulated of the deficits that you're kind of running each year. So that's why I think working towards that balanced budget or kind of having a plan for that general deficit over time would be really good and fundamental for the organization's continuing operations. But this one I thought does a good job at kind of breaking down what is actually included in that surplus and gives a little bit more color to the facts. If you are just looking at the surplus, it does feel like there's a surplus there, but really there's an operational deficit to be aware of. Any questions on that piece of it?
So the tangible capital asset is really only good if we need to borrow more money.
That's just recognizing.
Like it's just the difference between what the building's worth now and what we owe on it.
It's
Essentially,
the cost on your books versus kind of the fair value though, because it's not recorded at fair market value. So it would be the difference between the cost that's on your books and what the debt you have on it. Presumably the fair market value is higher. So there would be a little bit more if you look at it in terms of what you could sell it for. If you have to liquidate, like that would help cover off these unfunded pieces. But then your whole operations are ending at that point for liquidation, so.
so it's gotta be somewhere then at what? 14 million, 15 million? What do we got? We owe 3 and 7? 10?
A little over, so
13.
probably 11. We owe 11 probably on everything.
And then we figure it's worth somewhere around 14. Is that what
The
we're,
entire corporation or just? Because we only have debt on the one building, right? But we own the two.
We've never had a fair market evaluation.
well, we got 3.3.
We haven't had a fair market evaluation would be like someone telling us, if we put this building in for sale, this is what they.
Yeah, which I
We've
asked.
never done it,
No,
so we have no idea what we're actually worth.
I just,
And it doesn't matter because we're not selling, so.
just we had 3.5 last year.
Mhm.
And now we're 3.3.
So the difference would be a function of then the amortization of the building, bringing that net realizable value down.
Because we're another year older.
Yeah,
But
yeah.
I think a lot of this is going to be the conversation when we go to develop that budget. Trying to get to a balanced budget and what that looks like.
yeah,
So you'll have to charge the taxpayers for it, like I said, you know?
Yeah.
see, this is where it gets dicey. So are you gonna run it off an operational?
Yeah.
And a cash flow, or are you gonna run it off a,
You've got to run it off of operational.
You might not have a choice because seemingly she's gonna be the one dictating that.
And if you were at full capacity with the units though, like looking at, should that cover up everything, presumably, right? Like, because there was quite a bit of vacancies. The last note there I'll highlight is note number 12 on the commitment. So we're required just to disclose any future commitments that the organization has signed. So the updated contract with Tempo going to the end of June 2029.
Anyways, right?
What's that?
That's different now anyways, isn't it?
Yeah. Starts July, doesn't it? July 1st, I think.
Any other questions on the statements? Anything you wanted to add, Lindsay? Nope, you've covered it all.
We got a lot of numbers to go through there.
That's a lot. And kind of a mind-boggling too, to your point, like with all the different pieces and how you have to report it for the standards, but then kind of looking at it.
It has been, and we've been, like Bo said, we've been going through this for a while to get our head around everything, and Lindsay's been great in to get us
Yeah,
documents that we can compare month to month so we can see what's going on. But then we had to really take a break and do the governance portion as to who are we and how do we function. So we've done that, which is great. I think the budget documents that we get into early fall, summer, that's when we're really gonna be back into telling. Maybe we'll have to call back in on you at that point in
Sure.
time to go through
Yeah.
some more stuff. Because if we get the first budget done right, then everything could work off that budget. It's getting the first one right.
Mhm.
And I can't say that that's ever really happened.
Second one, because we have a budget for this year.
What's that?
Second one, because we have a budget for this year.
Yeah. But the first one that's gonna take some time to develop. And that might be more than Lindsay can multiple, like, it's just not fair to put it all on one person's shoulders, so being able to work. We'll have to talk about that, but yeah,
No, we'll get there.
she has other work to do in this building, other than just.
Different.
We people full time for next
Slide building, Tim?
Is there any other motion or is somebody ready to make a motion that we receive the audited financials as presented by MMP?
Yeah.
And furthermore, that we refer appendix B to the July SCAC meeting to establish a timetable to address each of the deficiencies. Bo, Steve, all in favor? Passes.
Just keep your hand up, Steve.
Yeah.
Yes.
So at that time, we'll take a look at,
Everything.
rank them, figure out where we need, and then we'll start picking them off and,
Yeah.
and, good time for Lindsay to give her, and, you can start looking at those, thinking how much time and
Time for
you're
vacation.
gonna.
I think I'll have a vacation before, so hopefully.
Yeah,
I would do it the week of.
Yeah, that's right.
build the team in the background to get that all put together. Thank you.
Yep.
That was good. I'm sorry for the delay.
Yeah,
It does happen to us once in a while.
I know.
Okay, thank you.
It's my bad. I was cutting grass. Didn't even.
I was trying to find check acquisition forms and terrible documents. Couldn't find them,
Thank you.
so I wasn't the only one that was there.
No, Mike phones me, coming to the meeting, I'm like, when is it? In 10 minutes?
So how much earlier were you tonight?
Not just enough to sit down and.
I think we covered off all of those. I see there's 3 recommendations there, but I think we covered them all off, all in one that I motioned. I think we'll
Do we need to?
financial matters. So Lindsay, what do you want to walk us through?
Did anybody have any questions with the reports? It was pretty straightforward.
Yeah,
I
didn't have any real questions on.
think the only kind of the profit and loss, because Caradoc Place, we pay property taxes on the installment date. So there was $13,000 in May. That was the installment that was due for that building there, whereas the other building we pay monthly.
Okay.
So that's why it's a bit lower. Yeah, I think that was kind of the only thing that stood out to me, but if you have any questions?
No, but
Deal
they're,
with money next month.
all of these things are gonna become really important when we go to do that budget.
It did, yeah.
So I need a recommendation. Third part is that the May 2026 check detail report be received for information. Bo, Steve, all in favor, passes. And the 6.2 recommendation that the May 2026 financial reports be received for information. Steve, Bo, and that motion passes. Rental summary report. I think that probably releases you. Something else?
Anything else?
That's the rental summary that's written in you, isn't it?
No.
Oh, I posted it, but
Yeah,
But
I mean, it's there.
yeah. I think a couple of the units that were vacant had been filled in June anyway, so it's
Yeah, yeah, so
decreasing.
probably Tim's gonna touch on a lot of it anyways, so. Why don't we accept 6.3 and we'll jump right into 7. So somebody will motion that the May 2026 rental summary report be received for information. Oh, Steve, all in favor, passes, and we'll get right into Tim. Sir, you have the floor.
Okay.
Oh, okay, one sec, just give it a moment while Steve, takes a moment.
Now, am I allowed to talk about unit numbers here, or I just can't? talk?
Even, well,
Because
we're in open. So we're being recorded?
Yeah.
No, keep it high level.
Yeah.
And then.
I got in trouble for my first report I sent in because I had too much information.
Yeah. Keep it really high level so that,
that your Corvette? I wondered, I backed into it.
Oh, good.
Are we being recorded still?
Oh, good, I got you.
All right.
Christ, there better not be. It's a sharp car.
Yeah, it's nice.
Fun.
Yeah, it's super fun.
Yeah. To let TJ drive it,
He hasn't, yeah.
but
Yeah, it's, you know what, I traded, I switched trucks. I
Yeah.
traded my truck in. I actually got a check back. It's less expensive than the truck I was driving.
really,
They added down 22,000 off the list. So I think I could drive it for the summer and probably flip it for no money.
really, that'd be okay.
If I can.
And then you'll get into a truck again
Yeah,
because they're gonna want to start giving them away.
yeah.
It's crazy. We're looking at a baler with Kubota and they're like, look, we'll knock 35% off 0% finances for 4 years and a 4-year warranty.
Really.
But I should figure out museum.
Okay,
Well, they try to do that.
Yeah.
Jim,
Okay, so property reports. Queen Street, 2500 Queen Street is fully occupied. No notices of people leaving. Everyone's in good standing. There's a few issues I want to talk about there. We've had some animal issues, I guess would be the best way to say. So we put a recommendation forward for a common area animal policy. We have a service animal there's just some tenant conflicts. So I've attached that with my report for your guys' review and consideration. You don't have to do it today, but it was our suggestion that we do a common area animal policy to deal with it. That was one. Two, we've got some gardens that are really creeping into the yards. We manage where we put an area for gardens, like common gardens. Our recommendation would be that for this year, we allow them to have what they have, but maybe for next year, because we're past the planting season, we look at putting a common garden area in and then a policy that makes them keep whatever they want on their patio and not creep into the yards. Again, that's your guys' decision. That's our recommendation on that. Had some tenants cheesed off, basically, I would say is the best way to put it, that the units are getting refreshed, but their units aren't. So just bring that to.
They work.
Right. We put something there, the board may want to consider a cost share with tenants wanting earlier refreshes. There's some tenants that have been there more than 10 years. The problem is from a board side is typically we have to do a complete refresh anyway once they leave, because they will hung something or be marks or any of the rest of it. So it's really no net savings to doing it sooner for the board. But it was just something I want to pass for the messenger.
Huge imposition for them because they have to basically move their sheet out
Right.
for us to do it.
Yeah. Just something to bring to your attention. I don't need action on it, but I need to bring it to your attention. And then we had the accessibility talks from before that. We've had they've come back again about the same as what we've already talked about in the past.
yeah, that's enclosed.
Right, okay. We're working on painting the common areas, which we had said we would do before the end of the summer. Rebecca's recommended that we have the balcony and railings inspected. She said that there's rust on the railings. She thinks that we should have an engineer come just look at them to make sure that they're all right. We deal with Leah Lambert, who's right in Mount Bridges. My recommendation would be to have Leah come and take a look at them. She's really reasonable. See if they're fine. Maybe they just need painting, but I could bring a report back about the railings and balconies. Parking lots are faded. We have all the equipment to do that. So if you guys are good with the time material at a regular rates, we're happy to repaint the parking lot lines. And, we've got 2 of the 3 quotes back for hallway stairing, but we haven't got funding, grants confirmed yet. So that's just something for future at this point. So I guess, so from, I can go on the bottom and ask you what I'd like. Okay, you guys can decide or not. 22645, we have some arrears, but that's closed, we
We're
have,
moving into the new spot, the new building? Is that what we're
Yeah.
at, 2-2?
yeah,
Before we leave there, do we want to do anything on the first thing, or you want to hear everything?
Let's do with 2500 Queen Street.
yeah, I have recommended actions.
So.
Yeah, just so that before I forget.
So the things I was looking for Queen Street was a common area animal bylaw.
So let's take that and refer it over to legal.
Let's do that, and what was the other policy?
A garden policy.
So, do you want to throw both of them to legal? Or
I'm
in,
not so worried about garden policy. I think that can be a board policy, but I did speak to legal already, Tuesday, and they're like, yeah, send that up to us because that's so the animal over to legal. Good, that, Steve?
Yep.
Yeah, okay, so Bo, Steve passes. Garden plot policy,
we'll deal in-house?
I think,
like,
so I think they should have to keep their gardens on to the patio. Or within a foot of their patio or some version of that. Because it ends up being a nightmare for people taking care of stuff and the creep gets.
I'm just wondering if this is not Temple.
Well,
You're the property manager. Do we just leave it in Temple's hands?
sure.
Well,
Because like, I mean, from a governance point of view,
wouldn't we need a policy though for animal enforce?
they don't know.
So let's,
Or it's got to be written in the lease, one or two,
Or it's gotta be which.
written in the lease. So like I know, for instance, in our lease, it's written in there that they can't attach a bird feeder or hang a bird feeder off the building or the balconies. I'm thinking something similar to that.
Well, and like I can't go put a community garden. I mean, that would be my recommendation.
No, but I mean.
But when they're putting a garden on
our land,
our land, it's just like, well, you're not allowed to do that.
but we don't have a policy that says that.
Well,
But I don't think you have to put a policy in place to tell them to stay off of our land.
the problem is there's lots of people there that have had stuff there.
Creeping.
Yeah, and for a long time. So they've,
Planting vegetables or flowers?
they're both, So there's some of both.
Why don't we do this? We've got, they've already done it for this year,
Yeah.
which is kind of what he's saying.
Yeah.
So why don't we just look at it in-house? And if we think we need to move to legal, we'll do that. Otherwise, we'll create a policy in-house that possibly looks at a community garden as opposed to.
Okay, so,
Like my recommendation would be that we put a small community garden in and limit them to planting on their balconies.
So then the motion will be that we take a look at,
For this,
we come up with an option for tempo for the property management for garden.
so we develop a
You're a
policy.
lot more generous than I am, Tim. I'd just make the policy about not planting on their property.
about,
Yeah.
Someone's gonna have to maintain the community garden. That'll be coming in, right?
it's surprising the ones that I have, they actually do a pretty good job. Like, so I don't, it doesn't cost me anything really, very little, so I just go with it. Like 602 Albert Street has a pretty good garden down there, and one in Chatham does too.
So develop a garden policy in-house.
Yeah.
For 2027.
For 2027, yeah, because we've already lost it for this year.
So Bo's motioning that we develop a garden plot policy in-house, like do it in-house, for 20, starting in 2027. Steve?
Now, in saying that, this will apply to the whole corporation, not just.
Yeah.
You're on 25, and then what was your next?
So the other one was the people looking for unit refreshes that are still in their units. That was, my instant would be no, but that's a your call. I mean,
It's writing in their lease. So there is something in ours that says if they want their carpets cleaned or a wall, like maybe there's an entrance wall that's been scratched and all the hell because they have a blocker.
I don't think that there's nothing.
Do that, but we'll charge them.
Right, like, my thought was possibly a 50-50 thing, but like I said, that's costing you guys money, so.
But we
Because
can do that after 10 years, not in the 11th year, then even we do it again.
we're doing,
Hard to budget for, that's the problem. I think what we have to do is, that's going back into the audit, which says we need to do some refreshment reserve funding. And then we gotta figure out how much of that we're going to apply over a
I
year.
think this is just, you go on, like, if I was living in an apartment building, no landlord was coming in to pay my apartment while I live there. Like, we don't need to have a beating heart on this issue here. No, if they wanna,
I'm fine to say no.
if they've got a bunch of scratches and shit, they can go buy a can of paint and refresh it themselves. Like,
So let's just do this. Why don't we defer to next meeting to review, the contract? Any contracts, make sure there's no wording in there that says anything like that. There probably isn't. And then we'll make a decision.
That's fine.
Okay, we can defer.
Just for a month, just so that we make sure, like, because some of those ones might have been, I don't even know how old some of the people are.
Yeah,
don't forget, if they've been living for 10 years, they got a freaking bargaining rent.
That's what I mean, like,
So it's like, again, I don't feel like we need to have a bleeding heart on this issue.
because even if we moved them to another room, renovated the room and brought
Okay,
back,
because who's gonna move them and everything?
but now you're moving out,
Yeah.
like
Now you're just scratching hallways.
and you're getting into,
I think
have you
Steve's
left
got
this
an
place?
idea.
No, I agree too.
I won't want to say no without,
I just say no.
I don't want to say no without you guys saying no, because I don't
Okay.
want to.
Well, you just scared me when you talked about the contract.
So Steve's motioning on long-term tenant refresh? No.
I'll second it.
Okay, there we go.
Okay,
You're
Just- You were saying no.
the next one I can't bring up yet. So then I'm asking that we have Leah Lambert come do an inspection of the balconies and railings.
That is a maintenance issue, so you'll have that.
And restriping the parking lot. Again, that would be time.
That's maintenance, that's you.
Good. And the lighting, we're good still. I don't have.
We don't need any of that, that's all you.
Okay, perfect.
And the only reason I'm saying that is, again, talking to legal about now
Yeah.
that we have the thing, is if it's Tim, leave it with Tim
Yeah.
and don't give direction on it, because now you're pulling it back into us.
Yes.
So leave it with Tim.
Oh, I'm perfectly fine with
That's how
that.
that contract was drafted.
Okay, Adelaide Road, we'll go through arrears and closed if you want. There's an open house held on site. Facebook, Kijiji and Levi, weather was poor, 4 parties expressed an interest in viewing, but no applications were received. Currently, we have 1, 2, 3, 4, 5, 4 vacant units. 1 occupied June 5th, 1 temporarily occupied. Go down to 4. 3 of them are barrier free. 1 of them, there's an application pending, so that could be rented. But everything, basically the barrier frees aren't renting as quickly as everything else. 3 barrier frees, 304, 207, and 204 are currently vacant. If comparable accessible units under discussion for, that's closed. All units are ready to go there. It's just a matter of finding tenants, so. We did receive notice for a 1-bedroom standard market rent for August 31st, relocating for family reasons. And we received another notice for a 2-bedroom standard affordable unit, which will fill quickly. She's waiting, just pending, she's gonna move for school. So, but that unit would fill quickly. We may want, when that unit comes open, something to think about. I don't know. I'd have to check with CMHC, but maybe we could flip a barrier-free unit for an affordable 2-bedroom. Potentially, that might be a really smart idea, but we have to double check that we're allowed to do that. I don't see, because it's 2-bedroom for a 2-bedroom, why it would matter, but we're doing a backup battery and there's
Just move the room numbers.
yeah.
Done.
That's not really your guys. That's it. That's all.
Okay, so we've got everything we need.
Yeah, I didn't need anything decided. I care about the place. It's all Green Street this month.
Okay, so motion to receive the property management report.
We're talking not on,
Okay, still being recorded. You can't wait till we go close to Bo and Steve. Good. All in favor. Thank you. So we've received that. So 7.3 is the new one I added in. So Bill sent this to me. Every year they do a hazardous material and designated substances report at 2,500 Queen because it does have asbestos in it. That report's been done. It's come in. It's 47 pages long. It's fascinating. Following that, I asked Rob, like, how do you think we should deal with this? Because Littleborn sent it to me. One of the things he sent along is the second part to that, which is a like a document that the municipality uses if somebody was to breach that asbestos and how they have to document it and all of that. So long and short, I spoke with legal about it very briefly again, and they're like, send us the reports. Let's just take a look at it. I'm not sure if we need a policy, but effectively this needs to go to property management so that they're aware of it, and we will give direction that should something happen where one of these things are breached, here's your process or deal with that from a governance point of view. So I'm just looking for a motion to refer the documents in 7.3, the hazardous materials designated substances report, and the title for the other report is in there, Melanie, over to legal for their advice. Bo, Steve, and we'll get that done. With that, I need a motion to go into closed session at 5:39 for the purposes of one item in accordance with the procedure bylaw to approve in-camera meetings and also pursuant to 239(2)E of the Municipal Act regarding potential litigation.
sure,
So Steve and Bo, all in favor, and we will go into close.
Shoot the hour.